Hong Kong, Nikkei Markets, Hong Kong shares sank on Tuesday morning, with mainland companies leading losses, as deepening concerns over Sino-American trade tensions and a set of weak Chinese economic data weighed on sentiment. The Hang Seng Index was down 2.7% to 28,165.92 by the noon break. Social media and gaming major Tencent Holdings lost 2.3%, while financial heavyweights China construction bank, IA Group and London-headquartered HSBC Holdings fell 3.6%, 2.7%, and 2.5%, respectively. The four stocks were responsible for more than a third of the index's losses. The Xi Volatility Index, an indicator of expected market swings based on options pricing, jumped 19.5% to a level not seen since early April. The Hang Seng China Enterprises Index of large mainland companies listed in Hong Kong declined 3.4%. The Hang Seng Index dropped 5% in June, and market participants have been cautious in their outlook as trade tensions between the U.S. and China show few signs of abating ahead of a July 6 deadline for the U.S. implementation of tariffs on $34 billion worth of Chinese goods. Hong Kong's financial markets were closed on Monday for a holiday. The Shanghai Composite Index on Monday slid to its lowest level in more than 2 years, following data showing a slowdown in China's factory activity growth for June. China's official purchasing managers index fell to 51.5 last month, compared with 51.9 in May, and slightly lower than the 51.6 reading analysts polled by Reuters were expecting. China's equity benchmark, which lost 8% in June, was down 1.3% by midday on Tuesday, while the onshore traded yuan dropped 0.5% against the U.S. dollar to 6.6976, its weakest level since August 2017. I haven't seen any signal that the A-share market has reached a bottom yet. If the officials announce any bailouts, then we can judge that the market is around the bottom. But so far, we have not seen any government measures or any actions to strongly prop up the market, said Jackson Wang, analyst at Warong International Securities. The dropping Chinese yuan also shows that the government seems to be still looking for new measures to cope with the current status, which is resulting in a little panic this morning. Wang expects the Hang Seng Index to fluctuate within 1,000 points around the 28,000 level in short term. The impact from the uncertainties is still huge and investors are in wait-and-watch mode. China Mobile was down 2% at $68.30 in Hong Kong after the U.S. National Telecommunications and Information Administration on Monday recommended that the Federal Communications Commission deny the company's application to offer telecom services in the U.S. on security grounds. The move comes weeks after U.S. authorities imposed a $1.4 billion fine on ZTE, and requested sweeping changes to its board and management, in order to lift a ban on American companies from selling parts to the Chinese telecom equipment maker. ZTE slipped 1.2% after the company said its board of 14 directors resigned, and Li Zizhu was named chairman and one of its 8 new directors. The stock slumped 53% in June as trading resumed following a 2-month halt. FIH Mobile slid 6.6% after it forecast a consolidated net loss of $350 million for the first half of 2018, compared with a $199.1 million loss a year ago. Master Glory Group slumped 7.6% after the property developer and water supply company swung to a net loss of $502.8 million Hong Kong dollars, $64.1 million, for the year ended March 31. Carrie Chen,